Hello friends, good morning. Today we discuss the second chapter, final accounts of Solte. In this chapter, we must know the meaning of final account, trading account, profit and loss account, balance sheet, adjustment entries, numerical problems on final accounts of Solte. These are the points of this chapter. So first of all, meaning of final account. Final accounts gives an idea about the profitability and financial position of a business to its management, owners and other interested parties. It is combination of the following statements: trading account, profit and loss account and balance sheet. Now, trading account. What is trading account? What is the meaning of trading account? A company's financial statement shows the amount it has spent on its business activities, the money that those activities have earned in a particular period, and the profit or loss from them account used by a broker that contains all the investments of a particular investment. In trading account is prepared to find out the gross profit of the business for the particular accounting period. It is calculated by comparing the net sales with the cost of goods sold. We call in short CGS. Gross profit or gross loss is equal to net sale minus CGS, means cost of goods sold. Net sales is equal to total sale. Total sale means cash sale plus credit sales minus sale is equal to net sale, means total sale minus sale return or return inward. Cost of goods sold means is equal to opening stock plus net purchase plus direct expenses minus closing stock. Opening stock is equal to stock we have in hand at the start of the accounting year, we call in opening stock. Net purchases is equal to total purchases. Total purchases include cash purchases plus credit purchases minus purchase return or return out. Direct expense is equal to all expenses which are directly related to purchasing of goods and converting them into saleable condition. Closing stock is equal to stock we have in hand at the end of the accounting year. These are the information relating to trading account. Now the format of trading account. Look, format of trading account. Particular amount. First of all, opening stock, then purchase, then direct expenses, and gross profit carried down lastly on debit side. On credit side, sale, closing stock, and if any balance, gross loss carried down. Then profit and loss account. Profit and loss account represent the gross profit as transferred from trading account on the credit side of it, along with any other income received by the firm like interest, commission, etc. Debit side of profit and loss account is a summary of all the indirect expenses as incurred by the firm during the particular accounting year. For example, administrative expenses, personal expenses, financial expenses, selling and distribution expenses, depreciation, bad debts, interest, discount, etc. These are the expenses which are taken on debit side of profit and loss account. Balancing figure of profit and loss account represent the true and net profit as earned at the end of the accounting period and transferred to the balance sheet. Now the form of profit and loss account. Profit and loss account of Messrs dash 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 in bracket for the period ending dash dash on debit side the item salary, rent, office expenses, so many items. On credit side, gross profit brought down by bank interest received, by discount received, commission, uh, income, net loss transferred to balance sheet. These are the format of profit and loss account. Now balance sheet. A balance sheet reflects the financial position of business for the specific period of time. The balance sheet is prepared by tabulating the assets, means fixed assets plus current assets, and the liabilities, that liabilities means long term liability and current liabilities on a specific date, which are taken on balance sheet. Then assets. In balance sheet two side, liability and asset. The so assets are the economic resources for the business. It can be categorized as fixed asset, and fixed asset are purchased constructed assets used to earn profit only in current year but also in next coming year. However, it also depends upon the life and utility of the assets. Fixed assets may be tangible or intangible. Plant and machinery, land and building, furniture and fixture are examples of a few fixed assets. Then current asset, the assets which are easily available to discharge current liabilities of the firm, called as current asset. Cash at bank, stock and sundry debtors are the example of current assets. Then fictitious asset. Accumulated losses and expenses which are not actually any virtual assets called as fictitious asset. Discount on issue of shares, also fictitious. Profit and loss account and capitalized expenditure for time being are the main example of fictitious asset. Cash and cash equivalents. Cash balance, cash at bank and securities which are redeemable in next 3 months are called as cash and cash equivalents. Vesting asset, the assets which are reduced to exhausted in value because of their use are called as vesting asset. For example, mines, quarries, etc. Tangible asset, the asset which can be touched, seen and have volume such as cash, stock, building, etc. are called as tangible asset. We can touch it. Intangible asset, the asset which are valuable in nature but cannot be seen or touched and not have any volume, such as patents, goodwill and trademarks are the important examples of intangible asset, because we can't touch to goodwill or patents or trademarks. Then accounts receivable, the bills receivable and sundry debtors come under the category of account receivable. Then working capital, difference between the current asset and the current liabilities are called as working capital. Then second part of balance sheet, liability. A liability is obligation of a business firm company arise because of the past transactions events. Its settlement repayments is expected to result in an outflow from the resources of respective firm. There are two major types of liability. One is current liability. The liability which are expected to be liquidated by the end of current year are called as current liability. For example, taxes, account payable, wages, partial payments of long-term loans, etc. Long-term liability second. The liability which are expected to be liquidated in more than 1 year or a year are called as long-term liability. For example, mortgages, long-term loan, long-term bonds, pension obligation, etc. Now adjustment. Some important adjustment which are for preparation or solution for the problem. The first adjustment, that is the closing stock. Unsold stock at the end of financial year called closing stock and valued at cost or market value, whichever is less. Here meaning also given in the slide. Now what is treatment? First treatment, where an opening and closing stock adjusted through a purchase account and the value of closing stock given in trial balance, then closing stock will be shown on adjusted purchase account on the credit side of trading account and will appear in the balance sheet under current asset. Second, outstanding expenses. Expenses which are due or not paid called as outstanding expenses. The treatment, accounting treatment, outstanding expenses will be added in trading account or profit and loss account in a particular expenses account and will appear in the balance sheet of the balance sheet under the current liabilities. Third one is prepaid expenses. Expenses which are paid in advance are called as prepaid expenses. Treatment, prepaid expenses will be deducted from the particular expenses as appear in trading and profit and loss account and will be shown in the balance sheet under the current asset. Then fourth, accrued income, the income which is earned during the year but not yet received at the end of the financial year is called as accrued income. Income but not yet received, we call that accrued income. What is treatment? Accrued income will be added in the particular income under the profit and loss account and will be shown in the balance sheet as current asset. Fifth one is income received in advance and income received in advance but not earned, like advance rent, etc. The treatment is, accounting treatment is an income to be reduced by the amount of advance income in profit and loss account and will appear as current liabilities in the balance sheet. Then sixth one, interest on capital. Whereas interest paid on the capital introduced by the proprietors or partners of the firm, the treatment is debit side of profit and loss account and add to capital account, credit side of capital account. 7. Interest on drawing, where an interest paid on the capital introduced by the proprietor or partners of the firm called interest on drawing. The treatment, credit side of profit and loss account and reduced from capital account, debit side of drawing account. Number 8, provision for doubtful debts. Means if there is any doubt of the recovery from sundry debtors, we call it provision for doubtful debts. Accounting treatment: debit side of profit and loss account in balance sheet. Provision for the doubtful will be deducted from the sundry debtors account. Number 9. Provision for discount on debtors. If there is any offer of the discount to pay the debtors within certain period, we call in provision for discount on debtors. The treatment, accounting treatment: the debit side of profit and loss account and in the balance sheet, provision for the discount on debtors will be deducted from the sundry debtors account. Number 10. Bad debts. Bad debts: unrecovered debts or irrecoverable debts we call in bad debts. Accounting treatment: bad debt, debit side of profit and loss account. In the balance sheet, sundry debtors will be shown after deducting the bad debts. Number 11. Reserve for discount on creditors. If there is any chance to get discount on the payment of sundry creditors within certain period, call in reserve for discount on creditors. The treatment: credit side of profit and loss account and in the balance sheet, sundry creditors will be shown after deducting the reserve for discount. 12. Reserve fund. The reserve fund is a fund. Accounting treatment: debit side of profit and loss account and liability side of balance sheet. Then loss of stock by fire. There may be three conditions in the case. First, if stock is fully insured, credit side of trading account and asset side of balance sheet with full values of loss. Number 2, if stock is partially insured, credit side of trading account with total value of loss, debit side of profit and loss account with value of loss unrecoverable, and asset side of balance sheet with value recoverable. Third, if stock is not insured, credit side of trading account and debit side of profit and loss account. 14. Free samples to customers. Treatment: credit side of trading account and debit side of profit and loss account. 15th. Managerial commission and treatment is debit side of profit and loss account and liability side of balance sheet as commission payable. 16. Goods on sale or approval basis. If there is any unapproved stock lying with the customers at the end of financial year, means goods on sale or approval basis. The treatment: sales account debit to debtors account with sale price and stock account debit to trading account with cost price. Now form of balance sheet. Look, the form of balance sheet: liability side amount, asset side amount. This is the form. First we taken capital. In capital, less drawing, add net profit, add interest on capital. Then second item, sundry creditors, add unrecorded purchases, add bills payable which honor, and less discount or reserves. Then bank overdraft, bills payable, loan, mortgage, secured loan, general reserve, provident fund, outstanding expenses, pre-received income. These are the items of liability side. And on asset side, fixed asset and current asset, building, plant, land, furniture, leasehold premises, office, equipment, used tool, patents, goodwill, copyright, computer, software, horses, livestock, motor van, vehicles. These are all assets, and add addition and less sale of assets, and also less depreciation, and then right to outer column. The cash, bank, invest, fees receivable, closing stocks, sundry debtors. Uh, in sundry debtors, add unrecorded sales, less new bad debts, less new RDD, and then right to outer column. Discount on debtors, outstanding incomes, prepaid expenses, if given in the trial balance. These are the form of balance. So, dreams is not that you see in sleep, and dream is something that does not let you sleep. Former president of India, APJ Abdul Kalam's slogan, you motivate. So, thank you, friends. Stay home, stay